Hi, I'm Greg Fussell with Caldwell Banker, and I'm sitting here with Bryan Russell of First Bank. Thank you for being here, first of all.
Thank you, Greg.
Happy New Year.
Happy New Year.
Is it going to be a good year?
I don't think it could be worse than last year.
Well, let's hope not. There's never any guarantees.
Yeah, absolutely.
But let's hope 2024 is going to be a really
I think it's
good
going to
year.
be a good year. I think there's some promising factors out there that'll make real estate a little more enjoyable this year.
I hope so, because real estate can actually be quite a lot of fun and rewarding at times, but it needs to change a little bit than what it is now.
Yeah.
I do have a couple questions for you.
Sure.
Bryan has done some deals for me in the past, and I was very, very happy with the performance he had done and everything he did throughout the loan. Everything he told me went exactly like he said it would. He closed deals on time. He got people signed on time, and they were all very, very happy. So I do recommend him as a lender for you. But can you tell me a little bit about you and a little bit about First Bank?
Sure. I'll start with First Bank. So First Bank, it's about a $9 billion bank. It's a family-owned bank, and they've been family-owned for over 120 years.
What's the family?
The Dearborn family.
Dearborn, okay.
Yeah. They're out of Missouri, so it's Midwest Bank, but they have their largest bank branch footprint is actually here in California. About 50 branches in California, handful up here in Northern California, and the majority are down in Southern California. It's a great bank. It's $9 billion seems like a lot, but in bank standards, it's kind of small.
Right.
Which gives a guy like me, who is a control freak, the ability to get my hands, a hold of the people that make decisions that impact my clients. So from that standard, I love it. It's great, and they love the marketplace. They love California. I'm a 50-state lender, so I can loan anywhere in the country, and I do. First Bank. I am a VP. I run a branch here in Northern California. I have loan officers that report directly to me.
Right. What about you?
So I've been in the business for 28 years. Out of college, I dabbled a little bit in the title business.
Okay.
Then I went into selling real estate under a woman out of Saratoga who taught me everything I knew about real estate. And then did a startup, and then ultimately got into the mortgage side of things. I've been in it ever since.
Right. So you obviously like lending.
I do.
What is the most rewarding part of lending for you?
Hearing the comments that you just made in the beginning of the video. Lending it's not a sexy industry, right? It's not, it's not like...
Come on, sure it is.
It certainly isn't. But, it's a necessary business. And I think sometimes the industry gets in its own way and begins to try to commoditize something that requires a lot of detail and experience and practice. And so to make the comments you made about me initially goes a long way, because I put a lot of pride and effort in making sure that those transactions flow the way they're supposed to.
No, I'm dead serious about it, because you had a couple of deals there that said, no, this is good. It's going to close. We're going to close it on this day, and it happened exactly that way.
Yeah, you got to be. You have to be an expert in what you do.
Right.
Everybody in this business, we're all in essence self-employed to the extent that if we stop working, we stop getting paid, and that makes you the CEO of your own business. And whether your business is a 7-Eleven or a mortgage business or a real estate business, in order for you to be in business, you have to be doing business. And so if you own a 7-Eleven, you don't make any money and pay your bills if you keep the door locked and the lights off.
Sure.
And so you got to come to work every day. You have to be a master of your craft and continue to study, continue to see, understand what the changes are. To be of value, you got to create value. We've been talking about that in the real estate industry every year on the year. How do we continue to create value for our clients? Right? We say it all the time in our business. And I think in the mortgage side of things, unfortunately, there are a small percentage that still manage to that philosophy, but there's a large percentage that don't.
Yeah. Well, you're probably a little bit like me. I'm only happy when I'm in the transaction.
Yeah.
Because if I don't have any real estate business, of course, you're going to do a lot more transactions than I do. But, during the course of the year, if there's a month or so that you're slow and stuff like that, you're not as happy.
Right. No, the grind is getting the business, but once you get that deal, it's like, okay, now,
yeah.
let me show you
Yeah,
what I can
right,
do.
right, on that stuff. What do you think are going to be the biggest challenges for a buyer coming in 2024?
Inventory.
Inventory?
Yeah, inventory. I think a lot of people would say interest rates, and I don't think so. Interest rates hit those peaks, this last year upwards to around that 8% mark. On an average, 8% is an ugly rate, but it didn't scare me because I think the average over the last 30 years is like 6.5%.
Yes.
So, yeah, it's higher, and it was ugly, and that payment is ugly on an 8% interest rate. I go, but now, they're already starting to come down, and they're going to continue to come down. And so really, I think for buyers/borrowers, the challenge is going to be finding a property. Inventory in our area specifically is so low that it really takes the wind out of their sails.
Well, you're absolutely right, because there's a tremendous amount of money in this valley, and there's still people out there paying cash for homes when they buy them. So it's not a fact that, these people go out there and can pay cash for them. They still have problems buying the house because, like you say, inventory is very low.
Absolutely.
But hopefully that's going to change this year.
Well, that's up to you.
I'm working on it. I am working on it.
Single-handedly, I need you to double
That's
the
right.
inventory if you can, please.
Okay, I'd like to. I would like to. So when you're going through that, you have First Bank, which you really enjoy.
Mm-hmm.
You're doing things that you enjoy. What do you look for in the future now? And I know that's not really, maybe not quite a lender question, but you're a good guy. What are you looking for?
In what aspect of like, what am I looking for in my business, or
What are you looking for in your business? Because you have the branch, you're the VP.
Yeah.
Going forward, where do you see yourself going?
Yeah, I always have, you always have your funding targets, right? That's sales 101. You got to have a target in order to aim at something, right? So I always have that. It's really just refining my process. It's a constant learning curve. Things are constantly changing. Regulations change. I mean, there's so much that changes, and you have to be astute as to what the economy is doing, and the financial markets are, it's a roller coaster every day. So to stay on top of things is literally a full-time job in and of itself. But as far as my, I'm not a spring chicken. I got 2 high schoolers, one going off to college next year, and one right behind him. So what I'm looking to is to do well enough to make sure I could write those college checks. But I think working with being blessed enough to work with agents like yourself, it's less about just getting a relationship or getting a deal. It's more about getting a great relationship and having a great experience with a client. Yeah,
I appreciate that as well too. Well, when you get a first-time homeowner or a first-time borrower, they're coming in. They go into a lending institution. They don't know what they're doing. How do you make them feel at ease?
Yeah. I start by just asking a lot of questions.
Okay.
And some people say, "Ooh, you pepper them with questions. That's terrible." No. I learned this actually from a completely different industry. If you go into like the sales software industry, the sales engineers that they have in these other industries, and we have a lot of these great industries around us, they have a phenomenal sales methodology, and I learned that you have to start with proper discovery. If you don't understand what the buyer is looking to do, more importantly, if the buyer doesn't know what they're looking to do, they're going to be running all over the place and never really clear on what their expectations are, what their goal is. And so a lot of this with a first-time home buyer is sitting down and having them establish their expectations. It's funny. Everybody says, how much could I get qualified for? What's the max I can buy? I'll give you all those numbers, no problem. But what is more important than that number is, what are you comfortable spending on a monthly basis? What's that monthly budget look like for you? Let's talk about your monthly expenses. What do you have coming up? Oh, you got 2 kids in high school too? Okay, you got college coming up. Let's plan accordingly.
Right.
And when I start having that conversation with them and really being a financial tool on the team, that gets them to relax. Then they know that when they do execute and they get in the hands of their real estate agent, what they're looking to buy has already been vetted out is from a finance perspective. And they're comfortable taking that step. That is a whole different experience for the client, and I think it just really lends well to a good end to a proper transaction.
Yeah, I think that's an excellent point, because it's not always, I can qualify for $2 million.
Mm-hmm.
That still may not be the house that you need to buy.
Right.
You may need to buy that 1.5
Right.
because those $2 million payments, even though you can afford them, you don't want to.
Right. You got things coming up
things coming up. You have a vacation or a wedding, whatever.
And you know the
Makes a big
phrase
difference.
"house poor" is a real thing.
It is.
You know, and
It is.
and first time buyers. You know, I've been in situations before where I have, I take an approach. I try to be a financial advisor. You know, not a money manager, but you know, my experience, my education, everything is finance based.
Mm-hmm.
And so, if they're potentially looking beyond their means, I'm going to show them, you know, what their means is,
Right.
where they should be. Now, it's their money, it's their approval. They can buy whatever they want if they're qualified. But I'm going to give them other options. I'm going to give them other ways to look at it. And I have had situations where single mother, you know, looking to buy, her rent's going up, and you know, she's getting in a tough position. She's not sure she's going to be secure as she gets older, having to move from rental to rental, like just all those things. And you know, soft spot for a single mother because I was raised by one, and I want to make sure that she's fully taken care of.
Mm-hmm.
And when she's looking at properties that were well beyond what she should be budgeting for a number of factors that were coming her way, I was the first one to share it with her. Listen, let's look at all of this. You know, you qualify for this, and here's what you can go out there and buy. If you're comfortable with that, go for it. But look at what that leaves you at the end of the month. After all these things are paid, let's look at your take home. Let's look at everything there. Are you okay with having $500 net left over every month? Because that's a scary proposition to be in. What if something were to go wrong? What if your car breaks down? And so, you know, not every client is interested in having that conversation, and a lot of our clients in this area are very educated and incredibly intelligent. But you know, there are clients that come through that, you know, the money side of things is not their strong suit.
Well, it's not. And a lot of times or years ago, people looked at it, well, the bank said I could afford this, so I should be able to afford it.
Yeah. Well, that's what happened to us in 2002.
Right.
Look what happened.
Right. And, you know, you get people looking at that. There is a realistic point of where you have to look at it and say, I got to draw a line here because I can't go with that amount of money.
Yeah.
Now, I appreciate you doing that for people because I think it's very important.
Well, and it's funny
Very
because,
important.
you know, it's amazing what you can learn when you ask somebody, okay, you want to buy a house? Yeah, we're really excited. We want to buy. And I say, okay, what do you want your monthly payment on your house to be? It'll open your eyes, and it opens their eyes to also what's realistic, right? Someone was, I want my payment to be X.
Right.
I'm like, well, good luck with that. You know, that's that. You know what that translates to in loan amount? That's only this much.
Right.
You know, and there's nothing around here that you can find in that price range. But now it really gets them thinking like, okay, let me think this through here. Maybe it means I don't buy this summer. Maybe it means I buy next summer because I have a bonus coming in or I have some cash coming in that'll allow for me to, you know, change the delta on what these monthly expenses are going to be. So I think it's not only important, but I think it's you know, it's a responsibility we have to the client.
Right.
You know, as realtors, you guys have fiduciary responsibilities. I think we all do, especially if we consider ourselves professionals in the business.
Right. Well, you got to look at it. You got to take each client on their merit. You have to treat them with respect and dignity.
Yep.
And you got to be fair with them and honest with them.
Absolutely.
And I think we both try and do that to make our clients happy and get them into a place, because I keep telling clients all the time, the worst thing I can do is sell you a house that you don't want.
Yeah, well, I can speak specifically to that because we've had a transaction together where I know you were adamant about a couple that we were working with, that you were just so cautious about putting them in a price point that you knew was beneficial for them. That's not always the case. I have a lot of agents that I work with, and agents that I work with that maybe aren't partners, but you know, I inherit them as the client's mine. The clients also came to them, and they don't always think that way. It's, you know, driving up the sales price, and man, I couldn't sleep at night.
No, you can't. We can't do that. You can't go out. I mean, I know that we have to pay over on a lot of properties, but there's a point to where you can't pay just hundreds of thousands of dollars over all the time just to buy a house.
No.
And you can't get in a position where you're just trying to win the house.
Right.
Because after you win it, then you're stuck with it.
Yes.
And you may have made a decision, a bad decision, who knows? But no, I agree with you. Trying to look out for the customer and putting them first is the best thing we could do.
I think so. And it keeps you in business. I mean, we've been doing this a long time, and we wouldn't be doing this as long as we have been if that wasn't our intentions.
Right. Well, what else you have? What else would you like to tell the nice internet folks?
You know, I would say, you know, the hardest part to buying if I'm talking to first-time home buyers, the hardest part of this It's just getting that first conversation going with someone like me. You know, you could talk to an agent pretty easily. I want to buy a house. I like this house. I like this neighborhood. It's fun. It's exciting. Once you have to talk about finances to somebody and credit scores and all that stuff, it becomes a little less enticing.
Right.
But I'm going to tell you, I'm the guy you want to start with. Because once you break the ice with me and you get those things behind you and you know where you are, either A, what you have to work towards, which we would set a game plan around in a timetable that makes sense, or you know what you can do and you're ready to go. Once that's done, then the pressure and the anxiety around buying a house completely goes away.
Right.
And then the experience becomes much better. As far as seasoned investors, you know, it's understanding what the game plan is, right? If you're buying a second property or you're looking to diversify your portfolio into investment properties, same thing applies. You know, are you buying a second home? Are you buying an investment property? Are you buying multi-res? Like, these are all things you want to have at some point. Once you buy your first house, now you have your financial team in place. You have your real estate agent, you have your mortgage person, you have your financial advisor, you have your CPA. Now you have a financial team in place.
Right.
And you need to have that team in place moving forward. And so I would say to anybody out there that's thinking to consider that's considering to get into real estate ownership, start putting your team together. Need them first.
Good. Bryan, thank you so much for being here.
It was my pleasure.
Wait a minute,
Let's hear it.
How do people get in touch with you?
Oh, yeah. Gosh, you can just Google Bryan Russell Mortgage. I pop up everywhere. I have a bunch of social media. My Instagram, where I have a lot of great content, is Bryan Knows Lending, and that's Bryan with a Y. Facebook, Bryan Russell Mortgage Consultant.
Okay.
Of course, you can Google me. You can always call you.
Yep.
You have my contact info.
That works.
And I'm happy to take calls. My phone's always on. And even if it's just a quick bounce some ideas, or I'm always available for that stuff.
Excellent.
Yeah.
Thank you, sir.
All right. Good talking to you.